Hey guys, it's NeoFX. It's February 9th, 2018. It's about 9 o'clock Central Standard Time. And by the way, sorry for the tone. I've been a little under the weather lately, but I wanted to make a little video and see if we can kind of reorganize things a little bit because I'm getting all familiar questions about, is this the market crash you've been talking about, and what's going on, where we're going from here, and this and that. All right. So to summarize, you remember obviously my ultimate crash level was 23,000, and all the reasons were very valid. Okay, I mean, yes, it breached it by quite a bit. Okay, it breached it by quite a bit, and of course you have the usual suspects come on YouTube and say, well, great job, uh, and sarcastically telling me that I fucked it up, basically. But look, let me tell you something. The first thing you got to realize is that, first of all, it's easy to come back after the fact, okay, and say you were wrong. What's not easy was to call this 2009 bottom, which I essentially did because I've been bullish this market all along. To call this bottom, and the time I made the video for the Dow Jones was at I was probably at 20,000, and I said we're still got some room up to 23. You know, it's a bold prediction it's a bold endeavor, okay, to try and pick market tops like this. But what I'm saying is the reason, technically speaking, was very valid. Okay, 23,000 based on this unbelievable Fibonacci ABCD swing on a 30-year chart, 40-year almost, was very valid. Okay, so 23,000 did not hold. Clearly went to 26 and a half. But one thing you got to keep in mind is this, okay? And this is not me trying to find excuses. I'm just giving you facts. What I also said on that video, what I also said was that at 23,000, I will be very careful, okay? And what I want to see is a lot of volatility there. And if that happens, then yes, it's a confirmation that we're probably going south. But guys, we never got any. Volatility has been, here, I'll show it to you. Here's the VIX index. Volatility has been close to fucking zero all along, just until last week. Just until last week, during this market crash, during this pullback. Because that's what happens, okay? When fear comes in, when there's huge price swings, volatility goes up. There. But look until that, oh, sorry, wrong VIX. Look until last week though. Okay, so I told you that, to be officially short, back when I made the video, back in April of last year, that I needed to see a lot of volatility. We never got it. Okay. And even more importantly, okay, what was my thesis for the video? My thesis was that gold and silver are going to go up as a result of the coming market crash, right? Well, guys, gold finished last year 13% up. And we are absolutely due right now, literally right now. It's too tight of a range. This leg up, this 1, 2, 3, 4 is, I mean, it's certain. It's certain. If I was 1,000% sure last year, I'm 1,000,000% sure now. Okay, and the timing is perfect too, because with this volatility in the stock market, that's where some of the money's going to go. I mean, I'm sorry, okay? There might be a little pullback as a result, okay, as a result of a further crash. That always happens, almost always happens because margin calls come in. People sell some gold positions to cover the losses here in the market, but they're gonna go back to the safe haven. Okay, if you look at 2009 after the crash, okay, during the crash, gold pulled back with the market. Okay, but when the QE started happening, regardless of the market going up, when the QE started happening, gold essentially, there you go, that's 2008, 2009 bottom right here. So that's when the market bottomed in 2009, okay, the indexes, and that's when gold had already found the bottom actually, but it did go down with the market at first a little bit, and then this is what happened. From 700 to 1900. You do the math, that's almost 200%, okay, in 2 years. So the thesis, what I'm saying is the thesis has held because gold is still up, okay? If my thesis was that the markets are going to crash and gold and silver are going to go up, and gold has held regardless of the market making all-time highs, well, then it's been so low now that when the markets do turn, remember I talked about the correlation, when the markets do turn, gold has to go up. Gold has to go up, okay? So the thesis has held because even in the face of all-time new market highs week in and week out, this last few months with Trump, gold has held. And it surprised me. Gold has held, okay? I'll tell you this, man. This leg right here into 15 to 1600 possibly is, it is almost guaranteed. After that, I'm going to need to see a little bit what happens. After that, it's kind of up for grabs. But because what I don't like necessarily is this trend line. Okay, so it's gonna touch the backside of that. Now, what happens after that? We're gonna have to see. There might be some consolidation. I don't know. But honestly, when you look at it long term, I'm sorry, man, but there's such a short squeeze. This is such a short squeeze on gold. This baby has to just blow up, man. It has to blow up. I don't see it pulling back anymore. And if it does, it'll be godsend too, but I don't think so. I really don't think so. So with the stock market. Okay. So last week, my brother calls me from Miami and he asked me, hey, after this first crash, he goes, what do you think? I said, well, keep an eye on 25-2. And I'll tell you why. And this is exactly what I did. I swear to God, I didn't have time to put this on Facebook, but this is exactly what I did. Why did I do that? Because what happens is when there's a flash crash, okay, there's a huge pullback like this, or a melt up. It works either way. It doesn't matter. Before the new low is done, okay, before the new low is breached, and we go further south, okay, what happens is if you scroll in, if you zoom in on the smaller time frames, you'll see that 90% of the time, excuse me, it'll form a Gartley. A Gartley is this. Here's the bottom, A, B, 618, perfect pullback, and this is just a 15-minute chart because that's how violent these moves were. This should drop 1,000 points in one day, if you remember, Thursday, Friday, whenever it was. Well, Monday again. So A, B, C, D, exactly. It can't get any perfect than this. A 618 retracement will take you to a 1618 extension. Okay. So, additionally, if you draw, because we're looking south, so we want to see where that A, B, C, D going south is. A, B. So from the swing high to swing low, then ideally, this is what a Gartley is. Ideally, your C point, you want it to come up to your C point for you to sell in an A, B, C, D fashion. Okay, this is essentially, you know, in line with the Elliott theory of the, well, they call them differently. They call them X point right here, then A, B, C, D, then they call that their B. Okay, so X, big A, large B, and then they go down for the C. But it doesn't matter. I keep it a little simple, simpler than that. I just follow the ABCDs. A, B, C. So with that said, with that Gartley completing at the 50% retracement of this leg, well, you know my rules on Fibonacci's. We're going to go to the 1618, which is, bam. So 127 first, 23, which was my target level back in the day, and 22. Guys, we're going to 22,000 short term. I'm sorry. The Dow Jones is going to 22,000 short term. Okay? And I'm sure they all look the same. Bam. Here's the S&P. S&P, same thing. Look, 50% bounce, just like the Dow Jones. 50% bounce. 50% bounce. So S&P, 24,000. NASDAQ, about 6,400 from now, from 68. Okay? So all three indexes, guys, breached my essentially my crash levels. Okay? That's fine. That's fine. It's easy to come back after the fact and say, hey, you got this wrong. Well, yeah, we've been in a fucking market melt-up with zero volatility. When there's zero volatility, the trend stays. So yes, I'm not surprised. But I stand by that reason that I called that crash at these levels then. And I stand on it now. That reason was valid. I didn't pull those numbers out of my ass. The 23,000 Dow Jones level was a valid technical reason, but now I'm telling. So it's okay. So it went up, and I also called it what, November, I guess, October, November 2017. So just a few months later, guys, it's not a big deal. It went up, yeah, it did breach it, but I was never officially short because I told you if I don't see volatility at that level, which we didn't, then you know you gotta hang on. You gotta wait. Well, volatility just came back, guys. Look at this shit. That was last week. Okay? That was in 2008, the big crash. That was a little pullback for the Grexit in 2015. So where does it stand? So I gave you the short term targets. Dow, probably 22,523. S&P, we're going to 2,400. And the NASDAQ will do 64, okay, short term. However, where does it leave us long term? Well, this one needs to happen, okay? Let's go back to the Dow. This is what needs to happen. So, we need a solid break of this one. I mean, I'm sorry, but this is the key one that needs to be broken, because short term, I have no doubt that we'll break the short term uptrend, no doubt. Okay, it might find some support here. Look at that, right at my levels. Okay, short term levels, 22.5, 23,000. So okay, may go sideways a little bit, maybe a little double top, but I think this will breach, or this may be a shoulder. It may make a little new high here and then break it, come back to the back side of it and create that shoulder. Point remains, the huge crash that I'm expecting needs to break this line from 2009 bottom. Okay, that's what needs to be broken. But even if this short-term uptrend line is broken, guys, if you look at this, you'll realize that there's no real major support until this level. 18,000, guys. We're at 24. Well, we're at 26 and a half almost. Yeah, that would be considered a crash. So even that would hold my theory. But I mean, I'm expecting it, honestly. I was expecting, so it's early to say. It's early to say. It's early to say, okay? But technically speaking, we're way overdue for a pullback. I don't think I've ever seen a bull market like this with this kind of speed. It's just not sustainable, man. I'm telling you. It's not sustainable. It has to come down. And fundamentally, what's going on? Well, fundamentally, we're going after higher interest rates. And the market's now finally realizing what that's going to do for it. The economy, guys, we have made the economy essentially dependent on zero interest rates, on cheap money. We got used to it. We fucking spoiled it. Okay, the Federal Bank, the Federal Reserve, has spoiled this economy and this market. Has indulged it for way too fucking long, 10 years almost, with zero interest rates and cheap money. And without inflation kicking in. Go fucking figure. Inflation has not kicked in as it should have. It's now starting to, but it's taken way too long. That's why I think gold and silver are going to go up. But it essentially, we have made this economy addicted to cheap money. And that's coming to an end. That's coming to an end. They can't do that. They printed up too much fucking money. Even they realize that. So they have to start their quantitative tightening program. They'll stop buying bonds. They're going to pay or let these ones mature. So they're going to basically try to fix their balance sheets. The problem is when you raise interest rates, which they already did in December and they will 3 more times this year, is what they're expecting. It's going to put a fucking halt to this economy, to this growth, and it's going to come down. Okay? And on top of that, it's going to make their debt, okay, their $21 trillion debt, the US debt, national debt, that much more expensive. Because that's why they kept zero interest rates. Because it doesn't burden the debt as much, okay? Low interest. Higher interest rates means they'll be paying exponentially more on their interest day in and day out. And you do the math, even a 1% basis point increase on $21 trillion, yeah, it's going to be bad. So, what this tells me, and I'll tell you again, is that they're trying to raise interest rates quickly because they're preparing for the next recession so they can cut interest rates again. I'm sorry, man, but that's what's going on. They are trying to play catch up with interest rates this year because they're expecting a huge recession so that they can then cut them again, because that's what they use to quote unquote stimulate the economy. They cut interest rates. Okay? But right now at 1.25, there's nothing to cut. They have no room to fucking cut. So they have to raise them first and then cut them after a recession. Okay, to stimulate the economy, so to speak. Okay, so very dangerous levels. Gold, in my opinion, gold, in my opinion, is gonna break out, guys. It's gonna break out. Gold is gonna break out. It's way overdue, actually, but it's going to break out as a result of this volatility in the market. There's no ifs or buts about it. I'm telling you, gold is about to break out to 1,500 or above. Silver, it's about to break out. I don't care about these little moves. It's the huge move you got to look at is that one. Your bottom A, B, C to a perfect 786 The 127 is gonna be hit at 21 at least. It's just been flirting within those ABC bound range. Your AB range can hold this here for fucking years, but it's gonna break out. It's gonna break out. Okay, it's gonna break out. So, and also finally, I just put this pic out on Facebook, and I sent it to my subscribers as well. So obviously I've been short, and I'm still short dollar Canadian since 128.50. Well, I knew it was going to take a breather and come back. Well, guess what happened right at this latest pic that I put? I literally just put this yesterday, 2.8. I said shorted at 126.70. Guys, it came today to 126.77, and look at the fucking wick we got. Look at that. So I added some more, obviously. Look at that price action right at that level. Okay, so the huge ABC is this to take us down. Okay, but you know, before that CD completes, you're gonna have fucking some pullbacks. It's not just gonna go down like that. So, and where was the pullback? Look, if you draw this up ABC, let's write the 786 of this. Okay, so no big deal, no big deal. We're still short, and we will hit 118. So what's that tell you? The dollar is resuming its downtrend. It is in a downtrend. This major leg right here, this A, B that started from 2015, C has to complete, and that's down to 115, if not below. Okay, so within that you have other A, B, C, Ds, and within even that you have other on short or smaller time frames. Okay, A, B, C, Ds. So right now, because you have to predict that this is, so we're assuming here that this is our smaller C point. So that means that this trend line should be respected. Right now it's not a valid trend line because we don't have a new low yet, but you have to do some forward thinking. So that's why I picked this level on this pullback, because if this is to be respected, if this is our ABC, okay, from back in December, then yeah, and look what happened. Look at this. I don't know what happened this morning. I have no idea. I just woke up to this. I mean, if that's not a fucking sign, guys, the dollar is resuming its downtrend. So gold and silver are about to take off. This little pullback on gold is nothing. I mean, it was bound to happen, because look, from December, it fucking blew up. It blew up. Well, this is the ETF, but it blew up from like 1240 to 1350 almost. So yeah, it's just a little pullback. Okay, the main leg is this, the smaller leg, A, B, C, right? This 786. The 127 is here. So after making a new high, it's gonna make new highs, and the smaller A, B, C. But long term, our main ABCD wave is being formed from 2015 low. Okay, this is it. A, B, C, 786 textbook, and 127. So it's going to stall here for a while, which will be 1400 roughly, and then I think we'll go up. Okay, so we're in, I think, breakout mode in gold and silver, guys. I mean, I'm sorry. The counter trend line has been broken. This has room to go. This has room to go. I'm sorry, but I stick by my original opinion. Okay, so that's what I think is going on right now. Is it the crash that I've been waiting for? It's early to say, but it could be. Nonetheless, we're still gonna go fucking down short term. I told you. Dow Jones, 22,000 short term. Okay, we're at 24 now. So there's 2,000 more pips. I'm sorry, more points to go down. S&P 24,000 to 25,000, but probably 24,000. And NASDAQ 64. I mean, 64,000, guys. So we'll still have major way to go down. I mean, even short term, by shit, a couple thousand points in each index. Well, except for the S&P, because the S&P doesn't work in 1,000 points, but 200 in this case. So from S&P from 26 to definitely 24,000. Okay. And the dollar, I think, is finally resuming its downtrend. So dollar Canadian is a short. Aussie dollar is a long. New Zealand dollar long. Whereas, and pound dollar, this is as good as it gets. There you go. I said wait for 138. We're at 138 right now. This is a pic that I sent out to my subscribers and to the guys on Facebook. So the pound dollar is a buy. Pound dollar is a buy. Dollar Canadian is a sell. New Zealand dollar is a buy, of course, and the Aussie dollar is a buy. Why not the euro, you say? Well, the euro, I don't know. It hit that target that I had, the 125. Sorry. It hit the target, so I don't know. I feel a little sketchy buying the euro again, even though you could. But the reason I do is because, look, we're at that long-term downward trend line. Let me take some of this shit out. But it did go just like I expected, man. From this 117.5 level to 126. It took about 3 months, but that was about 1,000 pips there. Okay, so can it keep going? It's still in a major uptrend. The only problem is that we're at that downward trend line on the fucking yearly. So naturally, it's gonna find some resistance here, and that's why I'm not messing with the euro right now. But New Zealand dollars got room to go. Aussie dollars got room to go. Still to 84, my original target. Remember, we bought at 75 here, 75 back in December, guys. On the weekly, look, 75.05. It bounced, and it made what, 81 it went to, so it went 600 pips, and then naturally it's gonna pull back, because before the A, B, C, D big swing completes, you're gonna have smaller A, B, C, Ds, and that's what's going on. Okay, so there you go, man. I just wanted to give you guys an update, and it's February 9th. Just wanted to kind of reorganize things a little bit and let you know what's going on with the market. But I'm telling you, we are on the verge of the dollar resuming. The dollar resuming its downtrend. And gold and silver absolutely blowing up, especially in correlation to the dollar. And markets will keep crashing for another few days or weeks. And after that, we'll see. Okay? All right. Thank you.